This call is now being recorded.
All right, everyone, welcome to another Klein um, campus store section. We had an amazing time yesterday. We talked a whole lot about trading aspect of we talked about forex, trading in forex, trading in it's learning how to use chart patterns, different types of candlestick patterns, how to we understood what was the meaning of lot spread and a whole lot of things yesterday. Yesterday was really an exciting time. So today we'll be talking about trading, right? But more in like sport analysis aspect, because for you to be a sport analyst or for you to know sport analysis, you have to have basic knowledge in trading. Basic knowledge, you have to have basic knowledge in technical analysis. So we're just going to do a little bit of technical analysis, and then I share my screen on how we can use both our centralized exchanges and our decentralized exchanges to buy tokens, how to use them to interact, and so much more. All right, let's get started. What we have to see. So, all right, you might be asking yourself what Spaniel is all about. I mean, it's just the campus store you saw and you just joined the group. You're asking yourself, what's Kleinel all about? No problem. Kleinel is an edtech company dedicated to empower individuals with the knowledge and skills to understand and navigate the world of Web3 and cryptocurrency. So what this all means is that we're here to guide you, we're here to help you learn crypto the right way. Here to help you get the basic knowledge and the basic skills that you need while while in crypto or while wanting to enter crypto, because crypto is a whole lot of things. It's not just one thing. Crypto is a skill itself. You have to learn crypto itself. It's not just a one day thing. Crypto is you every day you keep learning, every day you keep improving. Crypto is like a tech skill, right? Where we all want to venture into different tech skills like web development, data analysis, cyber security. The amount of time that we used to learn those tech skills is still the same thing for crypto, and then you still need to practice. So that's what crypto is all about. That's how crypto is. And for you to learn this crypto and for you to know more about crypto, you have to we're here to teach you the basics. We're here to show you how to do the right way. We're not just here to drop signals for you, or we're not just here to show you how this edge of blue. We're here to help you learn crypto the right way. We're here to help you the basics on how to use certain tools to interact with cryptocurrency, how to invest the right way, how to build a good portfolio, how to build a passive income with cryptocurrency. That's what Sky is all about. So that's what we're here to help you do. And we're currently in our campus store sections, which is going to be ending today. We had an amazing time yesterday, like I said. And today we'll be taking you through the trading aspects, but on spot analysis. Yesterday we talked about forex, how you can be forex and how you can learn trading through forex analysis, and then we use our metaphor trader and trading view, MetaTrader 4, sorry, and trading view to explain a whole lot of things. Today I'm going to be using our centralized exchanges. I'm going to be using Bybit, and then I'm going to be using a decentralized exchange like Phantom, right? So I'm going to show us how to like interact with both Phantom and Bybit, so that we'll be able to know how to buy tokens from our centralized exchanges, and we can also know how to buy tokens on our decentralized exchanges. So, and I'm going to still talk about some basic technical analysis skills. We're not going to dive deep down as how we dived deep down yesterday. We're just going to talk about basics, because being a sport analyst, you don't need to know so much about technical analysis, but you don't have to be completely ignorant about technical analysis as a sports trader. So let's go ahead. Like I said, today we are going to be talking about technical analysis, support, demand, and resistance or supply level. I'm going to show you what support and demand areas are, or the resistance levels. I'll be showing you on the charts, and then there are some charts already screenshot I'm going to show you. I'm going to explain it to you. Then I'll show you, we'll talk about candlestick and chart patterns. Then we're going to talk about risk management strategies. Then we're going to talk about buying and selling on the sports market. Then we're going to talk about potential gains and losses. We try our possible best to um, get on time, and we're able to touch everything that we want to talk about today. All right. So tools we're going to use to learn is Dex Screener, Mexi Global, TradingView, CoinMarketCap, CoinGecko, Binance, and a whole lot more. So I'm going to be using both CoinMarketCap, CoinGecko, Dex Screener. I don't know. I might not use Dex Screener, but if there's still a lot of time and if I need to touch some things, I'm definitely going to use Dex Screener. I'm going to definitely use my TradingView. Then for our centralized exchange, we're not going to use Binance or Mexi Global. We're going to be using Bybit. Like I said, and it's going to be a wonderful section, purely practical. We'll show you everything you need to do, the basic skills you need to learn to be a sport analyst, what you need, not so much. You don't. We're going to show you everything you are going to need to navigate the world of being a sport analyst. All right. Before I go ahead, can everyone hear me? If you can hear me, can you please give me a thumbs up so I know I'm not speaking to myself. All right, Chukwuebuka, I think that's a thumbs up you wanted to give. All right, no problem. Thank you so much, Clinton. All right, so we'll go ahead. I forgot to introduce myself. I am Nelson. I am the co-founder of Kleinel. I've been in the crypto space for 5 years and 5 years and counting. I'm a crypto enthusiast, a sports analyst. I trade forex, do technical trading and some other things in the crypto space. Like I said, the crypto space is very large. So there are a whole lot of things, other things I do. But we're not here to talk about me. I'm here to tell you people what you need to be, it's what you need to know as a sport analyst, or how to become a sport analyst. So yeah, let's get ahead. All right, so technical analysis. Technical analysis is a trading method that uses historical price data and trading volume to predict future prices, future price movements, or financial assets like currencies, stocks, or cryptocurrencies. So technical analysis literally encompasses both currencies. When we're talking about currencies, we're talking about your USD, JPY, we're talking about your Euro, JPY, you're talking about your any currency pair that you can find on the currency market. We're talking about your Japanese yen to United States dollar. We're talking about your British pounds, United States dollar. We're talking about your euros, United States dollar, euros to British pounds, and a whole lot. Technical analysis covers that. Technical analysis also covers stocks. Your stocks like your gold, your silver, your SP 500, S&P 500, a whole lot of other stocks. Your stocks you're talking about, any stock you can think about. So technical analysis still covers it, and then technical analysis still covers cryptocurrency. So you see why we are putting a whole lot power on technical analysis. But if you can learn technical analysis, if you can know the basics of technical analysis, you can easily pivot into different parts. You can easily have knowledge into different parts, though they might not have the same level, because when you are trading forex, you have to have greater knowledge of technical analysis. But with the basic knowledge of technical analysis you have in cryptocurrency or technical analysis in stocks, you can be able to comfortably trade your forex and your stocks and your cryptocurrencies in a very comfortable manner without losing so much money. All right, so go ahead. Instead of focusing on the company's financial health or overall economy, like in fundamental analysis, technical analysis looks at price charts and market patterns to identify trading opportunities. So what this says here is most times when trading crypto, there are two parts, there are two things you need to trade crypto. Talk about the technical analysis, and then we are talking about fundamental analysis. So fundamental analysis here means your news, like in the case of when you're trading a currency pair now, news like your FOMO news or your CPI news, that is currency price index news. The news like wars, news like issues that affect different states in the world, different countries in the world. So those news now is what is called fundamental analysis. Fundamental analytical part is the news part of the crypto trading. What's the news saying? For you to be a crypto trader, for you to be a currency trader, currency pair trader, for you to be a stock trader, you must always know what the news is saying. And then for you to be a currency trader now, for you to be a forex trader, the news that affects currency pairs a whole lot are news like currency price index, and there are a whole lot of other news that affects currency markets. Then for stocks now, you have news that affects specific stocks. Let's say the specific companies like Netflix. Let's say okay, Netflix is getting they had an issue with that company. That news is going to affect Netflix stocks a whole lot. So for stocks, the news that affects stocks are news about that particular company stock you're holding. Then it's the same thing for cryptocurrencies. News about that particular cryptocurrency you're holding, the news affects it a whole lot. Like news like how we had XRP when they were facing financial issues with the SEC, that is the Security Exchange Commissions in the United States. XRP literally dipped to like 15 cents. But immediately after that news, immediately after they were done with the news, XRP right now is at $2.20. You see, that's a whole lot of pump just because of the news on that particular cryptocurrency, because of that particular XRP. It's not like the news about wars or news about war, how the country is functioning, or what United States, what Donald Trump said doesn't affect crypto, or it doesn't affect currency pairs. It affects, but the news that affects them more are the news that are specific to those particular companies or those particular cryptocurrency. All right. So fundamental analysis, like I said, is news, right? But technical analysis now, you're literally looking at price charts. You're looking at the charts. You're looking at what's the chart telling you. You're looking at the chart, you just see a candle going up, going down. We're going to get into it, right? But you just see on the chart, you just see candles going up, going down. You just see one huge red line or one huge green line, and then you are confused. But having the skills of a technical analyst, you can be able to look at these charts, because each chart now, there are different chart patterns that they follow. Yes, charts follow chart patterns. Charts have candlesticks patterns that they follow. So if you are able to know these chart patterns, if you are able to know these candlestick patterns, then you are able to read the charts and get the best out of it, and then know where these particular prices are going to go to, know where the particular price of the cryptocurrency is going to go to, or know where the particular price of the forex pair is going to go to, or know where the particular price of that stock is going to go to. So technical analysis, it doesn't highly depend on the fundamental analysis, though technical analysis and fundamental analysis work hand in hand, because a particular news can just make the chart scatter. You will probably see something, and then when a news comes, you just destroy the whole patterns that you are thinking of. Yes, that happens. But apart from news, without news affecting the charts, the chart is just going on its normal pace, the normal way. A technical analyst can look at the chart and analyze the chart and get the best out of it, and know, what's your entry price, what's the amount of risks that you are willing to, what's the amount of money you are willing to risk with this particular trade. Okay, what is your take profit, what's the stop loss, and a whole lot of things. That's what a technical analyst help you to do. You having the skill of a technical analyst help you to do. You're able to read the charts, know more about the charts, to okay, what can I do? What is this chart telling me? Because if you just listen to news and then you don't know when you need to enter, or if you need to enter a particular period of time, or okay, if you enter another particular period of time, where is your take profit? Take profit means where you want to, okay, the amount of profit you have, you're enough with it. Or if you enter a chart, where the amount of price you're able to lose. You cannot know that as a fundamental analyst. That's why it also needs the skill of a technical analyst, both in cryptocurrency, both as a forex trader, both as a stock trader. So I've talked a lot about that. Let's go on. Important components of technical analysis. We have key levels. Key levels are talking about support and resistance. We'll talk about it. We'll see it in the charts. I will explain better when we get to the charts. Support and resistance line is just, okay, there's this particular region, right? You have looked at the chart and there's this particular region. You know that, okay, if this market goes to this particular region, for support now. If this market goes to this particular region, it doesn't break below that particular region. It always comes down to that region and it goes back up. Comes down to that region and it goes back up. Comes down to that region and it goes back up. Once a particular region has three retests, like the market comes back to that region 3 times or 2 times safe, and it doesn't break that region, that region can be said as a key level of support. Or if you go back to the chart, remember when we were explaining what technical analysis was, we said historical data, right? So if you go back to the chart and then you see that particular support region, it's in other parts of the chart, right? So you can say, okay, that particular region is a key level. Or for a level of resistance now, you have, okay, once this market gets to this particular point, this particular high point, it doesn't break that particular high point, it just goes back to that point, it just goes to that point and it goes down, goes to that point and it goes down, goes to that point and it goes down. That is what resistance level means. Then market trend for cryptocurrency, because I'm talking about mostly about cryptocurrency today. Market trend is all about, okay, is this a uptrend market or a downtrend market? We're going to see it in the chart, uptrend or a downtrend market. Then chart patterns, there are a whole lot of different chart patterns that we're going to talk about some of them. Chart patterns like bullish flag, you have your engulf, your cup and handle, you have your double bottom, double top, you have your head and shoulder, a whole lot of different chart patterns. Chart patterns are a whole lot, but you're just supposed to know the one that works for you. You identify the chart pattern that works for you and you stay with it. That's because there are a whole lot, millions of chart patterns, a whole lot of chart patterns. And then we have time frames. Time frames like you have a 1 hour time frame, 30 minutes time frame, 15 minutes time frame, 1 month time frame, 1 week time frame, a day time frame, or the daily time frame. So all these time frames, they all have their importance. That sometimes when you're analyzing a chart and then you're just waiting for the daily time frame to close. For mainly the daily time frame to close, you can be able to know, okay, your region of entry. And then for you to be using daily time frame or 1 hour or 30 minutes time frame, you're either a scalper. Number one, a scalper is someone that enters trades and just lives at a short moment of time, doesn't spend a whole lot of time on the trade, right? Then you are using lower time frames. Then we get to indicators and oscillators. Indicators like RSI, your RSI level. We are going to see how to use RSI level. Then we have volume analysis. Volume analysis is literally the amount of money that has entered the market with the type of candlestick that you see. When you see candlesticks that are very large, like a very large green candlestick or very large red candlestick, you can know the amount of volume that's entered the market at that particular point in time. Or when you see the particular trends, you can still know the amount of volume that's entered the market. But for volume analysis now for cryptocurrency, we're going to also use CoinMarketCap or CoinGecko to see the amount of volume that has entered that particular coin or the cryptocurrency we want to buy in the past 24 hours. I'm going to show you how to use your CoinMarketCap or CoinGecko to identify that. So why technical analysis is useful? Number one, it's useful for identifying trends. Helps you to catch big market moves. Number two, it's used for timing trends to show when to enter or exit a trade, like I said before. Number three, risk management, like I said earlier, helps you set your stop loss levels. That is the amount of money you are willing to risk, and then also helps you to set your profit targets, the amount of money you can gain, you are willing to gain, and know that, okay, doesn't matter what the market wants to do, you are comfortable with this amount of money. Is it your 1:3, 1:2 RR, 1:3 RR? When anytime you hear someone say 1:3 RR, it means risk and reward ratio. That's what I just basically saying. Risk and reward. So 1 is your risk, then 3 is your reward. That is for the amount of money you are willing to risk times 3. That's the 1 times 3. Let's say you enter a trade and you are willing to lose $5. And then your reward ratio, you want your rewards to be 3 times the money amount to risk. That is 3 times $5. That is 15. That's that's the calculation you need. Don't not allow them to confuse you. That's the basic things. That's the basic thing you need to know. Then we also have confirmation. Having to confirm signals from other form of analysis. Yes, technical analysis helps to confirm signals because most times when the price or you have looked at the chart pattern of the particular token or cryptocurrency you are looking at, you have to wait for the chart to come back and confirm the price. Like, okay, that's the correct price that you need to enter at. I'm going to show you what confirmation means on the chart very soon. We are going to soon dive into that part. Don't worry, it's a whole lot of theory now. But when you are done with theory, I need you to understand the what we're talking about, so that when we enter the chart, you can literally be saying it without me explaining too much, right? You just know what it is. Once I just say it, you just know what it is. All right. So we have support or demand or resistance levels. Those are the key levels, like I explained earlier. Support and resistance levels are specific price points on trading charts where price of an asset tends to pause or reverse its direction. Pause or reverse its direction. All right, these levels are crucial for traders because they often indicate where buying or selling pressure is likely to increase, creating potential trading opportunities. Like I explained, support level, that is the demand level. Support is also called demand level. Then resistance is also called supply level. So the support level now, it's a price level where demand for an asset is strong enough to prevent the price from falling further. Like I said earlier, it acts as a floor or a holding price up. So that particular region, like I explained, it's like a floor, or it's like the price that's where the price has a whole lot of strength to prevent it from dumping below that particular level. There's always a support level or resistance level in any chart. You just have to spot it. You have to you just have to spot it on the chart. Then you have resistance level, that's your supply level. The price level where price selling pressure is strong enough to prevent the price from rising further, or it acts as a ceiling holding the price down. Exactly. Resistance level up, support level down. Let me just put it like that. So support level is the least it's the least point the price can go, or the price that the point that the price holds up below, like least down, support level down, resistance level up. The resistance level is the particular point in the chart that the price doesn't break above. Support level is the particular point in the chart that the price doesn't break below. So anytime that the chart comes to that particular region, it's always either for support level now, the price always goes back up, or for resistance level, the price always comes down. And then anytime that the charts break, or the particular price, or when the price breaks that particular support or resistance level, it always goes the right direction it needs to go. Once it's able, let's say, let's take a cryptocurrency coin for example now. Let's say Ethereum. Once Ethereum is able to break, let's just use a price like $2,600. Once Ethereum is able to break $2,600, it's that okay, it's going to continue going up, because probably there's a resistance at $2,600 to $2,550. There was a huge resistance level at that particular region. So okay, once Ethereum breaks that particular resistance and it's going to go up, then when for support level, okay, once if Ethereum breaks below $2,000, that okay, it's going to 2,000 to like $1,900. That it's going to go down. So that was support level, and that was resistance level. Is when time here support level is talking about prices below, and resistance level is talking about prices above. So go ahead. Okay, this is an example of a support level. That's your demand level, right? Um, all right. So the way we determine support levels, you can use horizontal lines or okay, give me a moment. Let me just quickly switch to trading view so that I can just show you some. Let's transport some support levels together. All right. Just a moment. Okay. Let me share my screen. All right. So this is trading view that I said we were going to use earlier. So I'm just going to use it to enter. Let's just look at any chart right now. And let's see if we're able to spot support and resistance level. Or I'm just going to show you the tools that I used to that I used to how to place a support and a resistance level with those particular tools. Okay, so if you can see my screen, can I just get reactions so I know together? Can I just get reactions, thumbs up or something so I know that but I'm together. We're together. All right. Okay, so we want to spot a support level and we want to also spot a let's spot a support level. I think I'm already seeing the support level already in this chart. So remember I said
So I
support or
can't see
resistance.
your chat too.
You
I
can't see
can't
it.
see your screen. Yes, sir.
Uh, um, okay. Let me reshare it again. Sorry about that. Okay, sorry, can you see it now?
No, sir.
You can't see it.
Yes,
I
sir.
think I think you need to please leave and rejoin again. Probably it's your network because everyone else can see it. Can everyone else see it? Clinton, please can you see my screen? Obim, okay. Okay, that means it's network. Sorry, okay, Chukwuebuka, please can you see my screen now?
Yeah, I can see, sir.
Okay, okay. Please, there's no to come inside. There's no to come inside, right? Let's just keep that. All right, so
Wait,
remember I
I can't
said
see
support levels
again.
are regions, particular regions, right? Particular price points, particular regions. So I'm already seeing a support level right here, and let's just and I said to know support levels or to highlight support levels, we use either horizontal tools, there are different horizontal lines rather, or we use your rectangle, right? There are different tools on TradingView. You will need to learn how to use these tools. So we're going to have a code section. We're having a code section, right? On June 6th. So you just need to register and then we'll just teach you how to use these tools. I can't start explaining all these tools now. There are a whole lot of tools. So I'm just going to show us how to use horizontal line and your rectangle. All right, so horizontal line, you just need to click on it and then place it. Okay. For now, for your horizontal line just gives you a particular price range. Like now, we saw that the horizontal line and the price range is 1.9, 1.1 $99.99 40 or 1.9940, right? We saw that most of the time. Okay, let me make this better for all of us to see. So that at this point, at this $1 and 99 cents, XRP touched that particular point one. We can see it here that XRP touched this point, $1.99. It's touched here, it rose back up, and then we can also use this place as a region, because this other candlestick at this place here is also acting as, if we look at back at the candlestick data now, we can see that we'll see that this place is like a resistance. So we can also use this place as this region as a support level. And that's why I don't really like using a horizontal line, because horizontal line just like limits the price range that you're looking at. It just gives you one straight line. But let's just change to the rectangle. Let me show you why rectangles are, most times rectangles are better. To replace it here. All right. So now with the okay, sorry about that. All right, now, so we can see now with the rectangle, it's showing that, okay, this is the region we're looking at. This is the support region. Support region coming from $2 to $1.95 and 51, right? So we're seeing that the support region now is between $2 or $1.95 and 51. So this is what rectangle helps us to do with the rectangle 2. So we have seen that XRP has come to this particular support region. How many times? This particular time. You saw it here, it came here, it went back up. It came here, it tested and went back up. And then this one broke it. Though this candle broke it, but then it went back up. Then after going back up for a while, this is a 4-hour time frame. After going back up for a while, it came back to this particular region again. We saw it here, and then it bounced back up too. And then we also saw it here too. This is another region. It came back to this region again. It tested this region. This candlestick is $1.99. We saw it. It came back to this region again, and it went back up. And since then, it has been going back up for a while. And it's okay. It even came back down again. It broke it. But it broke this particular support. And okay, that's why you need to also set your stop loss. If you have set a good stop loss level, you probably will not have stopped out from this trade, and then you just be in the trade, and then the trade will be able to bounce back up. Another point again, see it again. This one to bounce back here, came to this support level and went back up. This one too again came to this support level, went back up, and then this one, it broke it completely. But with a good stop loss, you probably still be in the trade. Then this one now, this trade that is happening here, we can say, okay, probably it will come back here. So you just be waiting for an entry price. Just set your entry price at let's say 50% of this support level. Most times I put my entry price at 50% of the support level. So now 50% of this support level will be here. That's why I now use my rectangular tool. That's the half of that support level. That's what we're just talking about. So you put a rectangular tool there. Okay, that'll be like, okay, your entry point is going to be 50% of the support level, because most times it's safer to enter at 50% of that support level. So I know, okay, it's going to, even though it enters the support level, you know, okay, you're still going to be safe. Your stop loss, you won't be stopped out from the trade. So 50% of this support level are going to enter. Where's your entry trade is going to be? And then probably watch this chart. If I able to watch this chart over time, we know where Bitcoin is doing. Bitcoin is as a downtrend, is dipping right now. Let's just say it's correcting because it's broken new all-time high, right? So it has to go down. Anything that goes up must go down. That's just the way it is in cryptocurrency. So we know that, okay, the probability of it coming to this point is very, very high. So probably you can just look at this trade and monitor it and see, okay, whether it's going to come to this support level, but it's meant to come to this support level. So we can see that, oh, now this is a particular support level. Now I've shown us how to use both the horizontal tool, and then we have also seen how to use the rectangular tool to no support levels, and then let's see whether we can spot a resistance level. Remember, I said support level is the price that it doesn't break below that particular price, right? Then there's another support level. There's another key support level at this point too, at $1.60. There's another key support level. You can also say there's another support level at this point because the price has come here and this high. Sorry, let me just enter start. I don't. All right, so like I was saying, there's another key support level here. Why did I say so? This price now, this point, the lowest point this candle reach is $1.61 and 34. $1.61 and 34. Then when I say cents, please, sorry, so it's not to confuse. The cent is like 0.4. 0.4 is 40 cents. 0.04 is 4 cents, literally. And when I say cents, 0.4 is 40 cents. 0.4 is 4 cents. So you understand. Then 0.04 is 0.4 is 40 cents. 0.4 is 40 cents. 0.04 is 4 cents. Then 0.04 is 0.4 cents. And that's what I mean by cents. Like I said earlier, this other points here, let me just use a horizontal to mark it out so that we can see it. Okay, this other point here, the other blue line I just placed here, or let me just use a rectangular tool. Okay. Oh, sorry about this. It's too much. Okay, let's just leave it here. So this other points here that I marked out now, we can also see that this is another good support level. Because why did I say so? This red candle here, you can see, or you can also see this big red candle here. It entered this particular range, and then there's a high. When I say high, there is the highest point the price reach, right? There's a high right here that entered that is in the range of that particular price, and it didn't break it. It didn't break that particular support level. It just came back here and tested and went back up. So we can see that we just spotted multiple support levels, right? So support levels are just prices below, and resistance levels are prices above. So we'll also see whether we can. Let me see whether we can see any resistance, price resistance in any place here. All right, I can't really see anyone here. I can't see any resistance price here. I'm not really seeing anyone. Let's go to the 1 hour time frame. Okay. Please give me a moment. I'm trying to identify a good resistance level for us. I can't really see anyone right now, probably because I'm not settled down. But I'll be able to identify a support level, right? But this is it. The same tools I used to identify a support level on this chart. Is the same tool you use to identify a resistance level on the chart. So it's still the same. It's still the same thing. You need the same tool you use. That's your horizontal line, and your rectangle to identify that particular region the support level is, or the resistance level is. So that's just how to identify those parts. So we'll go back to the PDF. Let me share my screen. Sorry about that. All right, so okay, so like this chart now, what they use to identify the support level is a horizontal line. a horizontal line. Remember what I said when identifying the support levels? We saw a high that came to that particular point. Like you saw this high here, yeah, and then you saw this C support levels 1, support level 2, and then when anytime the price comes to that particular point, it always goes up. It always goes up. It always goes up. So that's just the same thing. That's just how it is. And then we also saw a high that so this particular point now that this support level is can also say it is a resistance level. Why did I say so? Because of when the price came to this particular point, so it came down 1, and when the price still came to that particular point, it came down, and then immediately it broke it, it went back up, and then when the price tested to that particular point right here, when the price tested to that particular point at this place, it came down and it went up, came back to that point and it went back up. So that's just it. So some particular levels, some support levels can also be resistance levels, right? So some support levels can also be some resistance levels. So support levels, some support levels can also be resistance levels. So we go ahead. Trend line. Okay, let me show you a trend line. That trend line means diagonal levels that form during trending markets. That's okay, is the market an uptrend market or is the market a downtrend market? So we're going to use the BTC chart for this on our trading view because BTC has been on the uptrend since. Let me just show you what I mean. Come, let me share my screen. Just give me a moment. Let me share my trading view screen. All right. Okay, so let's use BTC. So we're going to only be analyzing cryptocurrency tokens. We're not doing any forex pair right here. No forex pair. Talked about forex pairs yesterday, so it's only like cryptocurrency tokens we're going to be analyzing, right? Okay. So now uptrend markets. When they say that the market is uptrend, what does it mean? It just means the market is going up or it has been going up for a while. And then when they say market is downtrend, what does it mean? It means market has been down for a while. So let's just get that uptrend and downtrend market. So now from this uptrend market, another thing about uptrend market. Sorry, let me give you guys a good explanation. Uptrend markets means the market has making higher highs and higher lows. When I mean higher highs, let me explain what higher highs is. Higher highs means the market is making higher amounts. Like, let me show you what higher highs are. Higher highs. Sorry about that. Okay. So when I mean higher highs, that means at the particular point, let's say this point. Sorry, please give me a moment. I'm done meaning. Okay. So when I say higher highs now, let's take a look at this. Let's take a look at this chart. From here, the market started being from an uptrend from this particular point because this is Bitcoin. Like I said, it's on an uptrend. So higher highs, what higher highs mean is this particular candlestick now. So just give me a moment. Let me reopen trading view. Okay. Sorry about that. Okay. All right, my training view is loading. Please just give me a moment. Let me share my screen. So TradingView is both on mobile and desktop. So you can just download the TradingView app on your phone. TradingView. You see the logo. See a black background and white T and and the other letters V. So okay, let's open the trade again. Okay. Okay, I was talking about higher highs and higher lows. So higher highs now. At this point, okay, I'm trying to enlarge the market, the charts that all of us can, everybody can see well. All right, we can all see the screen very well now. It's way better now, Abi, right? Okay. So higher highs. What do I mean by higher highs? If you look at this point, this particular candlestick here, this one here, you can see this candlestick. It's the high of this candlestick is 86,000. 86,000. We saw that this particular candlestick now. We saw that the next high it's made. Next high. I'll explain what higher lows are, then I'll explain what higher highs are. So, okay, we saw that the lowest point, let's do this candlestick, let's come to this piece. We saw that the lowest point of this candlestick is 86,300. When I say higher lows and higher highs, what I just mean is the last point or the lowest point that a particular candlestick closed. Lows means the particular point, the lowest point a particular candlestick closed. Then high means that particular point, the highest point that particular candlestick went to. Low, that particular point, the lowest point that particular candlestick went to. High, the highest point that particular candlestick went to. So now the lowest point this particular candlestick went to, this one right here, is it's 6,300. And after we saw this particular low here, if you look at the charts, if we look at this chart from this point, from this 86,300, we have not seen the candle, we have not seen Bitcoin retest this particular point. So what does that mean? It means that Bitcoin is in an uptrend because it has not gone back to that particular 86,300. Or then we also look at this. We can also look at this low here too. So once the chart keeps making higher lows, like the lowest point, the price is going to, you say that chart is an uptrend. And I'm going to just show you, I'm going to use a diagonal line to show you that it's in an uptrend. You see it continues moving up, even though it goes down, goes up and come down, goes up and come down. But you see that there's more, the chart's creating higher highs and lower lows. So even at this point, the low of this candlestick is $74,530. We have seen that Bitcoin has not come to that particular point again since it broke that $74,530. And then we saw that each highs that Bitcoin is making, it has just been creating new highs over and over and over and again. So what we are going to say here that Bitcoin is an uptrend market, and then we're just going to use our diagonal our trend line to show this. So we can see the trend line now. I just put it. All right, I'm coming. Let me make this trend line bigger so that we can also see. All right. Okay. So now with this trend line, all we can see now is an uptrend. This is an uptrend market. Bitcoin has been making higher highs here, higher highs here, higher highs at this point, and higher highs. Higher lows. Higher lows. It has making higher lows, higher lows, higher lows, and higher lows. And then also it has making higher highs. Let's take it from here. That's making higher highs. Sorry, this is okay. So it has making, you saw a higher high here, we saw a higher high at this point, higher high at this one point. Then we also saw a higher high at this point here. This is the new all-time high for Bitcoin, $112,000 dollars. So this is just to show you this is an uptrend market, and then I'm still going to show you downtrend markets for bits. We're still using the same BTC chart, so I will not go so far. So give me a moment. I'm trying to identify to go. Okay, a downtrend market. This is a downtrend. This was a downtrend market earlier from Bitcoin. We short. So the components of a downtrend market is when the market is making lower highs and lower lows. Components of an uptrend market is when the market is making higher highs and higher lows. So we saw that from this chart now, we saw that from this place, we saw that Bitcoin's price at this particular point was 69,000, and after it reached 69,000, the other high was forming, so it was 45,000. The other high we saw again was 21,000. So we can just say that this was a downtrend from Bitcoin, right? That's what it is. So the component, what's the meaning of an uptrend market? What's the meaning of a downtrend market? An uptrend market is when the market makes higher highs and higher lows, and downtrend market is when the market makes lower highs and lower lows. That's just what it means. Lower highs and lower lows for downtrend, higher highs and higher lows for uptrend. So that's what uptrend market and downtrend market is. So you see, you need to have a basic knowledge of technical analysis for you to be able to be a spot analyst, because for you to know okay, when is the right time to buy a token? The right time to buy a token or a coin is when the price is low. So when it starts going back up, you just hold and you get your profit. I know the right time you want to take your profit. So when you show that Bitcoin is in a downtrend, you wait for it to create, wait for it to go to either a support level, or when you see that it's consolidating at that one particular price, you can just DCA. DCA means dollar cost average. Dollar cost average means you just put a little amount of money. Let's say you want to, the more you have to invest now, the more you have to buy tokens now is, let's say it's $1,000. But with DCA now, you can have $1,000, and then for every price or for every support levels that Bitcoin goes to. Let's say it goes to a new support level. You just buy $200 worth of Bitcoin, $200 worth of Bitcoin, till you see that okay, at this particular support level, it doesn't break it again, and then it just fully enter. So this year means you're entering little by little from your total capital that you want to actually invest. So that's why you need to have skill up as a need to have the technical analysis skill to also know, okay, to identify charts and to know chart patterns. Right here, we can also see that there was a resistance formed here at this particular point. There's a resistance region at this particular point. Let me just quickly show us that. There's a resistance region at this particular point. This is there's a resistance region at this particular point. This is what price is this? This is 73,000 to, there's a resistance region at 73,000 to 68,000, and we saw immediately that the price broke this resistance region right here with this candle. We have been seeing Bitcoin going back up, and then we saw the price touch back to that particular resistance level. Remember, I said some resistance level can also beat support levels. So this particular resistance level at 73,000 also became a support level for Bitcoin, and we saw that right here. It's the Bitcoin. Okay, the Bitcoin price touched it and it started going back up. So that's just for uptrend. So uptrend and downtrend. Uptrend is when the market forms higher highs and higher lows. Then downtrend is when the market forms lower highs and lower lows. So okay, let's go back to our PDF, our slide rather. All right. So for it to identify an uptrend or a downtrend market, you will use a diagonal line, like I just showed us, to identify an uptrend and a downtrend market. So we go ahead. Moving average support and resistance dynamic levels created by moving averages, which act as support and resistance depending on the trend direction. So you can also use, if you look at these charts now, okay, give me a moment, let me open the charts. Okay, you have to impute the sorry. So RSI means relative strength index, right? So let me share my screen. Okay, so let me remove the RSI value and show you how guys are able to. So remember I said there are indicators here. There are a whole lot of different indicators, but my favorite here is RSI. I use RSI indicator to see, okay, the trend of the market, how is the market going, relative strength index of that particular market. So we want to just click on the RSI. You can search the indicator you're looking for. There are a whole lot of indicators, a whole lot of them. You just know what the ones you want to use. I mean, when you want to do technical analysis, there are a whole lot of things, a whole lot of chart patterns you need to know, a whole lot of candlestick patterns, a whole lot of indicators that people use. But you just find what works for you. You can't use all of them to analyze the charts. You can just use some and just know, okay, anytime you have seen this particular chart pattern or this pattern, anytime you use this particular indicator, you have seen that, okay, the market goes up. As it comes to this particular point, it goes up or it goes down. You just know what works for you. You can't use all indicators. So this is RSI, relative strength index. So it's just to show us strength of the market. Shall I use strength of the market? All right, yeah, something like strength of the market to show us the amount of, we can also use this to know the amount of volume that has been entering the market. So we have seen that, okay, this at this particular point now, this is 70 at what's this point? at 112,000, there was a spike in the market, in the amount of volume that entered the market. And then we saw that after that point, we are seeing the market retracing, going down, and it's doing the same thing on the chart. We have seen that, okay, when the markets reach at 112,000, that's the new all-time high. We saw that, okay, the market is already retracing. And it's just showing us the charts, and you can just see the different chart patterns, the different the trend line to show us the trend of the market, to show us the strength of the market, how the market is going, how the market is going. So yeah, that's just what relative strength index is. This is another type of, this is an indicator you can also use to analyze the markets. So let's go back to our slide. All right. Okay, so RSI, you can use RSI to know the trend of the market, or even in when you are using charts, when you're looking at the charts on your centralized exchanges, they still show you this particular they still show you this particular trend lines. They still show you these particular trend lines on those particular charts. So you can also see it on your centralized exchanges. All right, so go ahead. What key levels are and why they are important in trading? Key levels, remember I said that support and resistance levels. So successful traders base directions on research, not hype, right? You must do your research. It's not just based on the hype. This model teaches us how to identify strong markets, narratives, and analyze data. So support and resistance level also teach you how to find your entry and your exit points. So support levels are telling you where to buy, where you can enter that particular trade, and resistance levels are telling you where to sell. Why? Because support levels, okay, once they come to that particular lows, they always go high, and when they go to that particular high, when they go to that particular when they go up to a particular price, they always fall down. So you always know your entry and your exit points. So you need to know how to use your support and resistance levels. The risk management, it also shows you how to set your stop loss level using below the support. Remember when we looked at the XRP trade, right? I said that with a good risk management, with a good stop loss level, you will not stop out from the trade, even though it went below, even though the chart went below the support levels. Because with support levels and resistance level, now you can set good stop losses and take profits, right? Take profits when you know you want to take your profits from. Risk management, it helps you to manage your risks, it helps you to manage money that you lose. The psychological significance. The levels often reflect collective emotions for traders like fear, greed, or hesitation. Most times when you enter a market now and you see, okay, just because of small movements, let's say, okay, you long the trade. When I mean long the trade, you are buying, you are saying, okay, the market is going to go up. You long the trade now, and then the market just starts going down a little bit. You won't panic because okay, you already have where your stop loss is. You won't panic. You know that, okay, your stop loss is already at a good point. You have already okay, this is where your stop loss is. If the price hits that stop loss, you leave the market. Unlike people that don't know where to set that stop loss, they are going to have a chicken mindset, right? You don't know, you are just so scared because you don't know where you put your stop loss. You'll be always anxious. You'll be like, will this market go my way or is it going against me? And then immediately you just leave the market, you see the market is going the right direction you wanted it to go. You could not just wait. Anytime you enter any trade, make sure, okay, when you leave the market, is either you get a stop loss or either you get a take profits. Just have that particular mindset. That is a psychology of most traders have. The only points that you leave trades before they hit stop loss or before they hit take profits is if you have heard the news. Like if you heard the news that 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 it's going to affect that particular trade, that, okay, most times fundamental analysis scatters your technical analysis. So, okay, just be like, okay, for you to be safe, or for you to know, okay, not to have any more problem, you just leave the trade. That's the only thing. That's the only time. That's the only good reason I can see you leave a trade before it hits your stop loss or your take profits. Then you have trend confirmations, breaking key levels. Breaking a key level can signal a start of a new trend or or the end of an old one. Like I showed us with trend lines, we should have Bitcoin now is in an uptrend market, right? So at a particular point, if Bitcoin breaks a particular low, you saw how that trend that was going on. If Bitcoin breaks that trend line now and starts going down, and then resets back up and it doesn't go back up, you know that okay, Bitcoin is ready to short, and then you take your short trade, and you know that okay, your short is your short is short. So this is what all trend line is going to help you to do, and support and resistance. I'm going to help you to know the right time to take your profits, the right time to exit, the right time, risk management strategy. They're going to teach you how to manage your loss, right? Your losses. And there's going to give you a good psychology, trader psychology, and then they are going to help you confirm trends. So okay, we already talked about this reward examples. So I'm going to do that. Common mistakes to avoid: ignoring the impact of market news. Like I said, remember, I said the only point that you leave a market when you hear a good fundamental analysis, a good fundamental news, because I said it earlier, I even forgot that it's written right here. Ignoring the impact of market news and events on key levels. Yes, so you should also take that in place. You should these are mistakes that you need to avoid. Then over relying on a single key level without considering the broader market context. Over relying on a key level, like over relying on a particular support level, over relying on a particular resistance level, without still using chart patterns and other or candlestick, looking at the candlestick pattern that it formed to also analyze the charts. Then failing to account for false breakouts when price and false breakouts. Remember that I said anytime that a trade, like if you have a particular support level, or let's just say you have a particular resistance level, and then the price goes up. I said that you should always wait for a confirmation. A confirmation means, okay, if the price goes up, it must still come down a little bit to touch that particular resistance level before it goes up completely. Yes, there are sometimes that, okay, the price just goes up and it leaves you and just continue going up. That is a different case. But most times it's safer and it's better for you to always wait for the price to get back into that your resistance level before you take the trade. That is a good risk management practice, or that is a good trading practice, so that you are safe and your trade is safe. There are sometimes that okay, you just have to enter the market based on probably the news you heard. The news you heard is a bullish news, and then you just enter the market because you know okay, the market should just be pumping. Or then when you see that the market after like a particular percentage of movements, and you see that the market doesn't come back, so you can just wait for a little retest and then you can re-enter the market. Sometimes those are sometimes rare cases, but it's always safe and it's a better trading way to always wait for a retest before you enter the market. So you must also always avoid these mistakes. You should not ignore market news at all. You should never ignore market news, and you should never over rely on single key levels without considering the border of without doing other trade analysis. Then you should always wait for a confirmation, always wait for a retest before you enter your the particular trade. So candlesticks patterns. So there are a whole lot of candlestick. So what's a candlestick pattern? Candlesticks are visual representations of price movement within a specific time period. They help traders understand market sentiment and identify potential trading opportunities based on historical price behavior. So the structure of the candlestick. So the candlestick is divided into two. Color, there's just additions. But the candlestick, let's say, is divided into three. So we have the body and the wick. So the body is represents the open and close prices within the chosen time frame. Remember, there are different time frame: 1 hour time frame, a day time frame, 30 minutes time frame, 15 minutes time frame, and a whole lot. Then week, the thin lines above and below the body representing the high and low prices. That's what week means. Then color, we have green or white candlesticks indicate price increases. That's bullish. Then white, while red or black candlesticks indicate price decreases. That is bearish. Let me just show us a little bit example of what I'm talking about on our chart. In a moment, let me share. I'm trying to view the screen. Okay. All right. Like we just said before, we just said now green is bullish candlestick. So these green candlesticks you are seeing indicates that the price is going up. Then red candlesticks indicates that the price is going down. Then you can also change the price and the color of these candlesticks now. Sorry, I'm trying to change the color of it. You can also change the color of these candlesticks patterns to black and white. All right, I'm sorry, I forgot to. I not forgotten. All right, changing this to color of these candlesticks. You can change it to black and white. You can change. There are a whole lot of different colors. You just decide on the color that okay works for you. But for this now, we can see that okay, red means bearish and green candlesticks means bullish. And then we said the candlesticks made up of wick and body, wick and body, wick and body. So right here we can see that wick represents the close and body. The body represents the close and the open of your market. Then the wick represents the highs and the lows of that particular market. So now this is a candlestick pattern. This is the body, this full part. The full part is the body. Then this the part that is this place is the wick and body, wick and body. So the body represents the open and the close of that particular market. The wick represents the highs and lows. When they say high, that means the highest point that particular candlestick reached, or the lowest point that particular candlestick reached. All right, so we go ahead. So there are different types of candlesticks. We have that candlesticks that make you see them, that are bullish patterns. Like okay, you are expecting market to go up, or candlesticks that make you see them, they are bearish patterns. They are expecting the market, they are expecting the market to go down. So example of those candlesticks that we have hammer. It's also called the pin bar candlestick. When you see a hammer, you know that okay, the candlestick is going up. What is the presentation of the hammer? This is the hammer. Hammer means shows that the pressure of the buyers are more than the pressure of the sellers. That's why you saw this type of candlestick. The pressure of the buyers are higher than the pressure of the sellers. Then we have the bullish engulfing bar. You are going to have a red candlestick. Then you are going to have after the red candlestick here, you are going to have a large green candlestick after it. Then you have morning star, bearish candlestick, and indecisive candlestick. So an indecisive candlestick looks like this. This is an indecisive candlestick. It doesn't know whether it's going up or down. But immediately after that indecisive candlestick, you see a bullish candle. You know that okay, this is a bullish pattern. I'm going to show some of all this in the chart. Let's just get done with. Okay, this is a bearish candlestick, shooting star. Examples of bearish candlesticks, that means they identify that immediately after that candlestick, it's going down. So we have shooting star. when you can see that the wick is here and the body is below, it shows that the pressure of the sellers is way more than the pressure of the buyer. So this is a bearish candlestick pattern. Then bearish engulfing bar. We have bullish engulfing bar. Bullish engulfing bar is a smaller body of bearish candle and then a larger body of bullish candle. But therefore, the bearish engulfing bar is the reversal. Is the case? The case is the reverse. Is the reverse? The case is reversed, right? Is you have a small bullish candlestick, then you have a large bullish, a large bearish candlestick flowing. Then we have evening star candlestick. We have a bullish candlestick. Then we have an indecisive candlestick. That's this. Then we have a bearish candle. So let me just show us hammer and any other candlestick we can find on our trading view. All right, so hammer, and we're going to identify hammer and some other candlestick patterns. So okay, I think I've seen this. If you look here, remember I said this is also called a morning star pattern. Bearish candle, indecisive candlestick pattern, bearish candle, indecisive candle, and then you have a bullish candle, and then you can see the market moved up. Bearish candle, indecisive candle, bullish candle, market moved up. Bearish candle, indecisive candlestick, and bullish candle, you see the market moves up. So this is this place right here. Let me identify it all. This place right here is called morning star. So this place right here is called morning star. Bearish candle, indecisive candle, bullish candlestick, and markets went up. So that is called morning star. Then let's see if we can identify a hammer. Okay, this is, you can say this is a hammer. This is a hammer. The buying pressure is way more than the selling pressure, and then we see that the markets went up right here. The buying pressure is way more than the selling pressure. This is a hammer candlestick, and when we saw the markets went up, then let's see whether we can identify more candlesticks. Another hammer right here again. The buying pressure is way more than the selling pressure, and then we saw a big markets went up. Markets went up. Buying pressure is way more than the selling pressure. So this is a hammer, and this other one, the other one that I showed earlier is also a hammer. So let's see. I'm trying to see if I can. This is also okay. I'm trying to see if I can identify a money star. If I can see a money star candlestick. Another hammer right here again. Buying pressure way more than the selling pressure, and the markets went up. Star. Yeah, I can't really see any money star candlestick right now. But I hope that we understand what they are. Well, if you need the document, the PDF file for this course, you can just fill the form that is in the chat box. They are going to be sent to you. Documents, the recording, and everything is going to be sent directly to your email. All right, so go ahead.
So we did it yesterday, but up to now, we haven't seen it.
Yeah, I'm sorry about that. We wanted to send everything together. So after today, we're going to send the recordings for last class, this class, and the books documents to everyone. Sorry about that. Please just still fill the form. Sorry about that. Okay. Okay. All right. So let's go ahead. Common mistakes to avoid when using the candlesticks pattern, ignoring the overall market trend and when analyzing patterns, over relying on a single pattern without considering other indicators, misinterpreting similar looking candlestick patterns. So go ahead. Risk management and trading. What's risk management? Risk management is the process of identifying, assessing, and controlling potential losses in trading. It helps traders protect their capital and stay profitable over a long term. So, what risk management helps you to do, it helps you to stay consistent with your risks, stay consistent with your profit targets, and helps you to divide your entire equity into a win rate. So I'm just going to share my screen now on mobile view because I feel all of us use mobile phones our to get our when we want to if we want to buy sports tokens, right? So I'm just going to show us how to buy and sell sports tokens on using Bybit. Remember I said that earlier, so we're going to touch on that now. We're entering that now. We're going to learn how to buy and sell sports tokens on Bybit. How you can buy and sell. Sports trading is okay. Let's just do the explanation here. It says sports trading means you're buying real cryptocurrency, right? Like one if you buy Bitcoin and Ethereum, you're buying that particular cryptocurrency. You actually own it, and you can keep it and sell it later, right? So I'm going to share my screen now on the mobile view so that we can see. I'm just going to show us how to buy and sell tokens on Bybit. So for you to use Bybit, it's basically very easy. Let me just share my screen on Android. Okay. All right. So right. So I've already funded the account earlier. I already funded the account earlier with $10 so that we can use it for our um, examples for me to show you how to buy, sell on Bybit. But I'm going to show you how to fund your Bybit account also. All right, so if you want to buy USDT, if you want to have USDT in your account, you can get USDT through different ways. You can deposit, or you can use P2P. Deposits right here means, let me just show us that. So once you enter your Bybit, you are going to be on your home screen. So all you need to do, you just navigate to your asset screen. So this wallet sign at the end of your screen, you click on it. Then you click on deposits. Once you click on deposits, you click on deposit crypto. You can see that there's P2P. You can see that there's P2P trading here. So we just click on deposit crypto. Once you click on deposit crypto, you search the crypto you want to deposit. Let's say USDT, Bitcoin, whatever crypto you want to deposit. There are a whole lot of them. So we are going to use USDT now. USDT on which particular chain? When you want to deposit any crypto, there are multiple chains, right? There are multiple chains, but you are going to have to choose the particular chain you want to deposit crypto from. That is, deposit your crypto into. Let's say BP20, that is your BSC chain. You click on it. Once you click on it, you select to confirm. Then you will see wallet address right here. So this your wallet address is like your bank account number. So all you need to do is copy, click on this icon by the side, and it shows copied successfully. Then send. You impute either if someone wants to send your USDT to you, you just have to send person this wallet address that you have copied. Send it to the person, and then the person sends you your USDT. That's as easy as that. Or if you are sending from another exchange, you just impute the wallet address in the parts designated for that, and then you are going to get your USDT to you. Or use P2P. P2P is peer-to-peer trading. Yeah, you're exchanging Nigerian naira for USDT. You can buy USDT. So the way you do it is you enter your P2P section, you see buy, then most times I click on filter. So you click on filter, you click on for filter so you can be able to, because there are some bad actors on your P2P trading. But for you to like filter that, you click on show verified advertisers, show only blog advertisers, and show only eligible ads. Click on confirm. Once you are done with that, the interface is going to refresh and only bring you to that point. Then you can see amounts right here. You click on amounts. When you click on amounts, impute the amounts you want. But let's say this is just going to help you to bring down the to filter the amounts you are willing to buy to help you trade easier. So you just say, okay, let's say you want to buy 10,000 naira worth of USD, that is United States dollars. You just write 10,000 here. I click on confirm. Immediately you click on confirm, you see, okay, these people are selling from so price to so price. So this first person you can see is selling USDT worth from 4,500 naira to a million naira, and you can also see 7,000 naira to 5 million, and there are a whole lot. So you just click on buy. Only if you click on buy, you impute the money, the amount you are willing to buy, the amount of USDT you are willing to buy. Once you impute the amount, it shows you the equivalent USDT, how much you are going to get, Then you click on buy, and then you just carry ahead with your transactions. So this money we are seeing, 1,616 naira, is the conversion rate, is the exchange rate rather. So you look for the best exchange rates. Most times the first person that you have there after your filter has the best exchange rates, but then it's also always good for you to trade with people that have the particular bank accounts that you have. Like you can see that this Gap exchange person has Kuda, OPay, United Bank of Africa, and Access Bank. Like uses all those banks, so it's easier for your transactions to come faster. So that's just all about P2P trading. I'm going to show us how to buy and sell cryptocurrency using market order or spot limits. So what we're going to do now, I'm about to transfer money from funding, because sometimes your money can either be in your funding. You see that the account is divided to funding and unified trading. So funding is when you want to buy when you want to get, if you buy USDT from P2P, your money goes directly to your funding. So you have to send that money to your unified trading if you want to either trade futures or you want to trade spots. So you have to transfer it from your funding. Click on Max here. You can see it's transferred to unified trading. So right now the money is at unified trading. Yeah. So you just go to trade. Once you go to trade, we see spots, futures, convert, margin, options, a whole lot. But we're looking at sports trading, right? So go to sports. Sorry.
So please, what is okay?
Sorry, you
So
say?
what does future trading entails?
Okay, future trading is just like forex trading, but for futures you are doing market analysis for only cryptocurrency tokens. So futures trading is just like the particular exchange you're using right now is borrowing you a particular amount of capital to trade for you to enter that particular trade. I'm going to show us here. So it's going to be easy. Okay, let's just do that. So this is futures trading now. Futures trading for baby USDT. So now for unlike sports, once you buy the token, it's yours. It's your own. You can buy and sell it at any time. But now for futures trading, you trade with leverage. The higher the leverage, the higher the money you need to have in your account, and the greater risks you are willing to take. So leverage is this times 10 that is showing here. Let me close this chart so it will be more visible. So leverage is this times 10 that is showing here. So there are a whole lot of leverage. You can see up to can see times 50 leverage. So the higher the leverage, the more risks you are willing to take, and the closer your liquidation price. Liquidation price means the price that the trade is going to close and going to lose all your money, or the closer your stop loss is going to be. So most times I enter with a medium leverage like X10 or X15 leverage. Then you also, when trading futures trading, there are two types of what's that called this now? Two types of ways. Two types of ways to trade. Either you are using the cross sorry, there are two types of margins. There are two types of margins you are using to trade. Either is the cross or isolated margin. So cross margin means you will be in a trade. If you enter a trade with a particular amount of money, right? When you enter a trade with a particular amount of money, the trade, if the trade is going up, you are making your profit. But when the trade is going down, the trade also takes money from your entire features, the entire money you have in your features account, or the entire money you have in your unified trading account. But for isolated trading now, it's only the particular amount of money you put in that particular trade is going to take. Let's say, okay, for this baby USDT now, you are using isolated margin and you put $5, you enter with $5. When the trade is going against you, or when the trade wants to liquidate, it only takes $5. But when you're using cross margin now, we are having a total of 10 USDT in this account. When the trade is going to go against you, the trade is going to take, if your trade liquidates, it takes the whole $10 in that particular account. But the advantage of cross margin is that it's going to help push your liquidation price push your liquidation price down, and it can help you set your stop limits down. For isolated trading, lately your trade reach minus 100%, your trade will close, you are going to be liquidated. But for cross trading, you can actually have a minus 100% and you can still be in your trade. So that's just the difference between cross and isolated trading. So that's just all about futures trading. Futures trading is the company or the centralized exchange are using to trade. They are lending you some amount of okay, I'm coming. They're lending you some amount of money to trade that particular. They're lending you some amount of money to trade. It's the same thing with forex trading. Forex trading now is the broker you are with that is going to lend that amount of money to enter the trade, or that amount of money you use to enter the trade. So that's it. The higher the leverage is this times 10 here, the higher the money that the corporation is going to give you to trade, or the higher the centralized exchange is going to give you to trade. So sorry, I can take your question right now.
Okay. So my question is this: like the way forex does this with lot size, does crypto spot trading this also with lot
No.
size?
Okay, no. Okay, good question. All right. So no, futures trading doesn't use lot size. So your lot size in forex is your leverage in crypto trading. That is this times 10 years. When on features now, if you're using one lot size, that is, you are telling the corporation to give you $10,000. Then 0.1 lot size. Sorry, one lot size is $100,000. Then 0.1 is $10,000. Then 0.01 is $1,000. That is how lot size works in forex. But for futures trading now, what you use instead of lot size in forex, you are using leverage. That's why this times 10 is here, and that's why it's there. So okay, another question.
Okay. So can I ask another question?
Okay, ask.
So which of the trading in crypto does, like, you want to buy a particular token, but you don't want to sell it now?
Okay, that's sports trading. That's sports trading.
Spot.
Yes, sports trading.
Okay.
Sports trading. Yes. So let me just show us how to trade on sports. So for us to trade on sports, we can also use from this trading parts, but currently no, I don't know what's happening. But so we'll just go to unified trading right here, and then we can search for the particular sports coin that we want to buy. Let's search for Solana. So we have seen it here. You just click on it. And then this sports trading we're doing. So you see that Solana has a lot of things pegged to it. You can see Solana USD, Solana BTC, Solana Euros, Solana USDC, Solana BRL, Solana USDE, a whole lot of things that you can trade Solana against, right? Just like you have GPP, GPP USD, and Euro USD, and all those things. So this is just like the tokens that you can trade against Solana, or you can trade Solana against. So we have Solana USDT. Since it's USDT, we're going to use Solana USDT. We click on it. So now we're going to buy and say, we can see right up here. We can see now we're on the sports tab. We're on the sports tab right here. So we're going to buy $10 worth of Solana. So now there are two ways of buying on your spots. You buy either by limits, and this is where you can set it. You can either buy limits or you can buy markets. So I'm going to explain. So limits now is you putting the particular price you want. Okay, if Solana close this particular price, that is when you want your trade to trigger, or that is when you want to buy into the Solana, or you want to buy into the token. But market means at that particular point, at that particular market price, at current market price, you want you want to buy that particular token. So I'm going to buy both limits and spot. So limits now, you can see that you can always come here and adjust the price. Okay, when Solana goes to, let's say if Solana goes to $100, that's what you want to buy. You just put $100 there and put your amount that you are willing to buy. 10 USDT, we have seen here. You can also use this bar to adjust the amount you're willing to put inside. 10 USDT, 82 USDT, whatever. So I'll answer your question, about when I'm done explaining. So once you are done, click on buy. That is, remember, I was saying we want this trade to trigger when Solana reach $100. So once you just click on buy sold, and then you see that your trade will come to order. That means this is your order. This is the order you have placed. It's just like placing order for food. So once the price reaches that particular point, the order is going to report. So
Give me that pretext to them.
sorry, do you have any question? You unmuted your mic.
Okay. So I have a question.
Sorry,
So can you hear me?
I can hear you. Sorry, please ask your question.
Okay. So my question is this: on this limit order, place order now, so it
Yeah.
means that your trade is not effective until when the particular token goes
Ex-
to that particular price.
Price. Yes.
Okay, understood, sir.
Sorry about that. Can everybody hear me?
Yes, we can hear you, sir.
Okay. So that's what limit order means. So I'm going to cancel right here. And you can still do that same thing for them sell. You don't want to sell that particular. Let's say you have that particular token, you don't sell when you reach that price. So I'm going to go to market order now. Markets, and then we are going to put buy. Market order is going to buy immediately. We are going to see. So I've already put the amount 10 USDT. Click on buy so, and then we can see we have the Solana in our wallet. If we go to our wallet, we're going to see Solana. See it right here. Solana, we have $9.88 worth of Solana already in our wallet. And then if we want to sell immediately, we can also, sorry. If you want to sell immediately, we can also sell immediately with market order. We'll just click on sell, and it sells once and for all, like that. So that's just the difference between limits and markets. Markets means at that particular current market price, and limits is when it's reached that particular price. So that's just basically how to sell both on limits and on market on your centralized exchange. So that's just all for that for centralized exchange. Then if you want to withdraw, you just put the person's wallet address and then you withdraw. And that's all. All right, Chukwemeka, sorry, you have a question.
So there's something that happened to me about 2 months ago while I was trying to buy a particular coin. After I did P2P, so
Yeah,
I converted the money to USDT.
yeah.
But I never knew that I was trading the coin. Before I know what is happening, the money was going down to the point that before I could realize myself, I've lost over $45 in that
Wow.
trade. Although
Good.
that was I never knew of. I don't know much about crypto. I don't know which
Yeah,
one is spot, which one is
but
future. I was just like, I want to
so
buy. I just bought a coin. So before I
yes.
could know what is happening, everything was going down.
So so what you entered now is was futures trading, and probably
Okay.
use a very high margin, a high leverage to enter. That's why that's happened. Sorry about that. Ignorance is very deadly. Ignorance is very deadly. Even the Bible says, "My people perish because of the lack of knowledge." So most times when you enter into, that's why it's always good for you to get knowledge, and that's why we're sharing the knowledge right now, so that we won't make these mistakes next time. And then we're going to be sharing a whole lot. I can't even cover everything right now in today's class. It's not even possible. There are a whole lot of other things that I will need to cover. That's why we're going to have it. We're having a cohort June 6th. June 6th. We're going to have a course where you either choose the program you want to join. If you want to become a sports analyst or you want to become a forex analyst. Now, sports analyst program, we teach you how to even know the coins to buy, how to identify the right coins to buy. Because I know the coin that you bought now is because somebody told you. You don't even know why the person said you should buy that coin. And maybe you bought that coin.
Exactly. It was somebody that told me that this is a
The coin
potential
started going
coin.
low. Exactly. So you see, you bought the coin and you started losing a whole lot of money. That's how it's supposed to be. So we're having a cohort, June 6th, that's when it's starting. So we just have to register. The price is 40,000 naira. We have two programs, forex analyst and sports analyst. So the sports analyst program, I'm going to teach you on how to identify the coins. And okay, even though we say we're in a class and we say why we should buy this token, we're going to tell you why we are going to buy it. Is it because of the market trend? Is it because of the news we have heard? Is it because of we have analyzed the charts? We don't just buy tokens like that as sports analysts. Now, no, you see the way I analyze, I had to go to the chart and analyze it. That's how I do for almost all my tokens I enter. Even though I don't use technical analysis, I always listen to the fundamental part of the token. So that's how you are supposed to be as a sport analyst. And then we're still going to teach you how to get stocks. Stocks market is another interesting market to enter. The stocks market is so beautiful. Buying the right stocks is going to make you, I mean, it's going to hit you well. So, like I said, we're going to have a quote June 6th. So, if you want to register, after this, we can just send the link directly to the client registration hub. You just register for the course that is happening June 6th. You just pick any program you want to learn, and then we're going to teach you everything. You can't really cover everything. You can't learn everything in crypto. Like I said when I was starting, crypto is like a tech skill. You have to develop it. It's not just you can't learn everything in one day. It's not possible. Even me too, that I've been in the space for 5 years and counting. There are a whole lot of meetings that going to the crypto space that I need to settle down and learn. I need to read, watch videos, or listen to people and learn from. So yeah, so that's just how it is. So I think that that will be all for today. We don't really have any these slides. We don't have anything in the slides again. So okay. Give me a moment. Let me just. I think I'll just talk a little bit about the. I'm going to talk a little bit about our section, our cohorts. So I will just get a whole lot of understanding on what I'm talking about. I'm going to show us how to register, and I'll show us the client registration hub and how to go about it. My colleague is going to send the link to the chat for the registration. I think he has already sent it. Okay. So, okay, my colleague is going to send the link to the registration to the chat. So we just enter it from where I am. And I'm going to share my link on how we are going to, and now you can go about the registration. Give me a moment, sorry. So I'm waiting for the link to load. I don't know what's happening to the network. Let me just share my screen while doing that. So this is kind of registration hub. I'm trying to come up. All right, it's coming up already. All right, so this is kind of registration hub for you to register for the program that is starting, our board section that is starting June 6th. So we have here chat with Kleinel. So we chat with Kleinel. Once you click on this place, it's going to take you to a WhatsApp number that you can chat with and ask any question about Kleinel. If you want to know more about Kleinel, just chat the number and someone is going to be at the back end to reply you as quickly as possible. And then you can check out our Facebook and Instagram pages to see what we have been doing, how I've been building and everything. You can check it out, our Facebook and Instagram page, and also give us a follow. And then our brochures, they are going to show you what we are going to be teaching you. The topics we are going to be covering as sports analyst, as a forex analyst, the topics we are going to be teaching you about. And then we are currently at a 20% discount offer for the first 20 persons. I think this should be over very soon. Probably just 1 or 2 people left. The 20% discount offer, the original fee is 50,000 naira, but the discounted offer is 40,000 naira. So I don't know how many people are left, but I know that not so much. I can't really remember. I know that not so much spots left because people have been buying the course for the courses. So you can either buy the sports course or the forex analyst, sports analyst course or the forex analyst course. It depends on anyone you want to go. These are you can go through the broker to see what you are going to be teaching you, the topics we are going to be teaching you, the timeline is going to be a 2 months timeline, 1 month for learning and 1 month for mentorship, because mentorship is very, very important. Mentorship to just take it through any question you have. We are going to be there for you. We are going to have one-on-one sections. There are a whole lot of clients is offering for you. One-on-one sections with experts, alumni communities. You have live sections. We are going to have live sections. We have market rundown, weekly, daily. We have sections where we bring in actual financial experts to teach you how to invest your money, because it's not also wise to invest all your money you have in cryptocurrency. It's not wise like that. You should have money. Okay, you have invested in cryptocurrency, money that you have for your expenditures, money that you have for your to invest in stocks, money that you have to save. You should know how to split your money that you have. So we are going to We have financial experts that are going to come in to teach us that how to know how to invest your money, how to know how to save your money, the particular percentage of, to know how to divide the particular income that is entering your hand monthly, to know how to put them into different places. So we're going to offering a whole lot of that. Then for our both courses. So let's just go ahead. If you want to buy our course, you just click on visit store. So it's loading. All right. So once you click on visit, so let's assume you want to go for our sports analyst program. So all you need to do is click on it, sports analyst program. Then you will see secure a seat. Click on secure a seat. Then you have to put in your full name and email address. Please, these are very important because immediately after making your payments, we are going to send you an email address immediately, and so that you can complete your registration. We're going to ask for other details from you. You can put your phone number. It's optional, but you should put your phone number. So immediately you are done with filling the immediately you are done with filling this, you click on proceed, and then you go ahead and you choose your payment method. You want to pay with card, you want to pay with bank transfer. You can see it here, payment with debit card or payment with bank transfer. So once you are done with that, that is done, and then we're going to send you a registration link immediately to your email that please you should complete your registration so that we get you started. We tell you what you need to do or how to prepare for the upcoming cohort. So that's all from us at Finals today. We're glad to have you here with us. It has been a wonderful today. Yesterday we talked a whole lot about forex, and today we still talked about sport analysis. I don't know why people didn't take the opportunity, but there's no problem about that. I hope that we all had knowledge, and I hope that we're able to impact in everyone's life. At least you have a brief knowledge on what to do in the sports analysis space, on the being a forex analyst. So that's all from us. Till next time. So we'll meet next time. We are climbing.